IS 23 borrowing cost. What is borrowing cost? How we treat it in the accounts, that we are going to learn. If you are new to my channel, please subscribe and hit the bell button. Let's start the video now. Borrowing cost is any cost that actually you take a loan from any bank or any financial institute, and you pay interest on it. So the question is that if a company is using its own funds, they can save this cost, and on the other hand, if a company is taking loan from bank, they have to pay the financial charges. So financial charges, earlier the question was that should it be capitalized or not. So this IAS deals in those type of transactions that either we should capitalize the financial cost or not. So we will discuss this in detail. What is borrowing cost? Defined in the IS 23, borrowing costs are interest and other costs incurred by an activity in connecting with the borrowing of the funds. As I explained earlier, this is the definition. Example of borrowing cost: interest expenses calculated using the effective interest method as described in IAS 39 financial instrument. Financial charges in respect of the financial lease recognized in according with IFRS 16 lease. Uh, Exchange difference arising from foreign currency borrowing to the extent that they are regarded as an adjustment of interest cost. These three costs are classified as borrowing cost, and whatever the amount you are paying, if they are fall under these three categories, they will be described as borrowing costs as per IS 23. It is very important that you have to understand this qualifying asset. This is the very important concept in IS 23. What is qualifying asset? Qualifying asset is an asset that necessarily takes a substantial period of time to get ready for its intended use or sale. Examples of qualifying assets: depending on the circumstances, any of the following may be qualifying assets: inventory, manufacturing cost. There are some examples. Financial assets and inventories that are manufactured or otherwise produced over a short period of time are not qualifying assets. Assets that are ready for their intended use or sale when acquired are not qualifying assets. Actually, what qualifying assets are those assets for whom you are taking the loan. For example, if you are making a project, if you are making a building, that building will be your qualifying asset. And for that, if you are borrowing any amount and you are paying any interest on that, so that cost has to be classified as borrowing cost. So these are some examples I mentioned: inventories, manufacturing plant, power generation facilities, intangible assets, and investment properties. They all there can be other examples as well. For example, if you are making an ERP, if you are trying to establish an ERP system, you are actually designing some from the scratch, so and you are taking a loan, you can classify this as well for qualifying assets. The treatment of qualifying assets, IS 23 borrowing cost regulates to the extent to which equities are allowed to capitalize borrowing costs incurred on money borrowed of the to finance the acquisition of certain assets. Borrowing cost must be classified as part of the cost of an asset if that asset is qualifying asset, one which necessarily takes a substantial period of time to get ready for its intended use or sale. What if it is a qualifying assets, or as per IS 23, which I just explained earlier, and you are taking loan and you are whatever you are paying extra for that in form of interest, that cost has to be classified as your cost of that asset. And that asset, you can add this cost until the asset is completed. We will go more in detail and we will take that what are the further criteria and technicalities for this IAS. Now the question is that if you have taken a loan, normally we take the loan from the bank, and bank has given you the loan, but suppose we have not started this asset, so what should we treat? Because you start paying the financial charges from the day one. So how we treat this? This slide will tell you about this. IS 23 states that capitalization of borrowing costs should commence when all the following conditions are met. Number one is that expenditure of the asset is being incurred. Number two, borrowing costs are being incurred. Number three, activities that are necessary to prepare the asset for its intended use or sale are in progress. All these three categories has to be met to capitalize your borrowing cost. If anything is missing, you cannot capitalize your borrowing cost. The rate of interest to be taken. Where funds are borrowed specifically to acquire qualifying assets, borrowing costs, which may be capitalized, are those actually incurred less any investment income on the temporary investment of the borrowing during the capitalization period. Now, the question is that from where this investment income I'm talking about, and this IAS is talking about. Let me give you an example. As I said, that you have taken a loan of 2 million from a bank, and you have not started your capitalization, you have not started preparing that asset because of some reasons. And earlier slide which I explained, that these three categories, suppose they are not matched. So an ideal treasury department will not keep these funds in the current account. What they will do, they will put in the saving accounts and get some interest income, investment income. So suppose you are paying at the rate of 5% for 1 million. Suppose you have taken 1 million and you have to pay 5% every month, and you are getting because you are and you put this 1 million in an investment account, and where from where you are getting 3% return. So it is saying that total cost, which is 5%, and total income, which is 3%, the difference of that amount has to be capitalized in the asset. Now another question is that you will be confused, that I said that asset has not been started. So and I mentioned that until the asset has started, we will not start capitalizing it. Sometime what happened, that you don't for example, in the same example, we take 1 million and we only consume 200,000 for that project. So rest of the 800,000 will be put in the investment account, and you will get some money. So smart treasury department, they don't keep all the funds in current account. They make a plan, and as per plan, the extra fund they invest into the bank account and keep getting the money for that. So if you have anything like this, you have to take the difference. You don't have to take the expense that okay, this investment income is something else. No, you have to take the difference amount as the borrowing cost. Next slide is cessation of capitalization. uh, what happened that sometime your activities are not started due to some approvals. For example, you are preparing a plant in some area, and due to some government approvals you are waiting. Or any example is that there is some industrial dispute happened, or some strike happened in the labor, or something happened, raw material you are unable to get. So and if such thing happens, you have to seize this capitalization cost, because you have to pay the interest cost, whatever happens. On the other hand, you cannot capitalize it because you are not using it, this cost for the plan. Let me read what IS says. Substantially all the activities necessary to prepare the qualifying asset for its intended use or sale are complete. IS 23 para 21. Or construction is suspended, example due to industrial dispute. So if anything happens, you have to seize the capitalization of this borrowing cost. Now let's dig this more. You have two type of borrowings. One is specific borrowing, another is general borrowing. What is specific borrowing is that you go to the bank and you said that, for example, I'm going to prepare a plant at XYZ place. So give me a loan of $500 million. So this is some specific borrowing. On the other hand, there are general borrowings. When the groups of the companies are working, their treasury department are keeping an eye and searching for ideal deals. And when they get a good deal from the bank, they take the money from the banks and keep in the group. And for example, they take 200 million dollar in the group. And company A in their group is asking that okay, we are going to establish an ERP system, so give us 50 million dollar. So what they will do, from the 200 million dollar they will give 50 million dollar, and that is called general borrowing. So how we treat this, that we are going to discuss further. For specific borrowing, where funds are specifically borrowed for qualifying asset, the amount of borrowing cost paid less investment income, if any, on the temporary investment of those funds will be capitalized. This is very simple, that you take fund for a specific qualifying assets, and the qualifying asset has started. Once it has started preparation and of this asset, so you can capitalize it until the asset is completed. This is what we have learned. But for the journal, this is the formula. The amount of the capitalized asset shall be computed on the basis of capitalization rate, which shall be weighted average of the borrowing cost applicable to the outstanding borrowing during the period. We have to calculate the rate for if we have general borrowing, and the formula for calculation of the rate is this one: capitalization rate equals to total borrowing cost incurred, how much you have borrowed, divided by weighted borrowing outstanding. You have to take the weighted borrowing outstanding. It is a detailed topic which I cannot tell in the video. So that I normally tell in the class, how you calculate and how you find out the weighted borrowing outstanding, and you multiply, so you get the capitalization rate. And based on the capitalization, once you get the capitalization rate, you apply for the amount you have borrowed, and then you simply calculate the borrowing cost of that qualifying asset. At the end, we have to disclose disclosure of IAS 23 says that the amount of borrowing costs capitalized during the period and the capitalization rate used to determine the amount of borrowing costs eligible for capitalization. Some example: the total amount of borrowing costs capitalized during the period is rupees 75,145. This is you have to mention like this in the disclosure of. You have to disclose these information in your financials. Capitalization rate for the year used to capitalize borrowing cost is 9.15%, which we just learned. So this, I hope you learn IS 23 now. Please share this video with the finance professionals, and especially with the students. And if you have any question, just discuss with me in the comments. Share this video and subscribe my channel. Thank you very much. Take care. Bye bye.